go ahead and talk about those affirmations. Good evening, Bahamas and Chicago. Now, I am a BYOB master trader, right? I'm a BYOB master trader. I am the signal. All my trades in profit, I am 777. So we want to walk in that energy. We want to walk in that mindset. Now, let's just go right ahead and dive in, and let's just make sure we understand exactly what all this means, okay? We definitely want to make sure that we're walking in that energy. We want to make sure that we have that right mindset. So let's just really, really talk about what that means, because tonight is BYOB Basics. Tonight, we are taking it back to the basics, okay? That is what this is. So it's like a basic training boot camp, whatever you want to call it. That's exactly what this is. And so we're definitely taking it back, okay? That's definitely something that we need to do, must do. Make sure you grab that foundation. All right, ladies and gentlemen. So definitely, definitely, definitely. All right, so now why is that mindset so important? I'm a BYOB master trader, and I want to emphasize something with you all this evening. When you say and you declare and decree over your personal life, and you declare and decree that you are a BYOB master trader, ultimately what that means, okay? What that means is that you are making that decision. You are making a decision that you want to be that signal. You want to grab this skill set. You want to walk in that right energy. That is ultimately what you want to do. And so that is what you're able to do, because you're walking in the right mindset. This skill set is not difficult. It's just different. And it takes the right mindset. Okay, so I'm a BYOB master trader. I am the signal. Now, as you know, you are empowered here with Be Your Own Bank, okay? You are empowered. Be Your Own Bank is about financially educating and impacting. And yes, we're talking about 1 million families financially educated and impacted, all right? Yes, we're talking about 1 million families financially educated and impacted. And that is that's what we're here to discuss. And that's literally what that means. Now, all right, all my trades in profit, which means I'm trading with an expectancy. Good evening, Baton Rouge. I'm trading with an expectancy. So let's go ahead and dive in here this evening. And as I get my screen shared together, you know, as I pull my screen up, what I need from you all is, if this is your first time here with us this evening, I need a 111 in the chat. This is your first time here with us this evening, I need a 111 in the chat. And if you are still learning how to cash out, let me get a 222. All right, let me get a 222. Your first time here with us this evening, let me get a 111. If you are still learning how to cash out, let me get a 222 in the chat. Just drop it in the chat. And you guys can see this, our same markup from this morning, right? Our same markup from this morning. So let me say welcome, welcome, and welcome back. Welcome, welcome, and welcome back to each and every last one of you all. So because I know we have some new individuals on the line, which is definitely very exciting for you all to be here with us this evening. You know, what I definitely want to do is I just, like I said, let me officially welcome you, but also with me welcoming you, what I also want to make sure is that you understand what we do, why we do it the way we do it, you know, just from that understanding. So once again, my name is Tasha. I'm Diamond Trade Whisperer. I'm actually the creator of the BYOB Cash Out strategy. And I just definitely want to make sure that you all first and foremost understand how to utilize the BYOB Cash Out. So, and I also want you all to understand, because what we've done is we've taken trades and we've taught you guys, you have your HFX simplified, BYOB cash out, HFX simplified, right? So we also are, you know, I have my swing traders, I have my master traders that are scalpers, you know, we have individuals trading commodities, we have individuals trading cryptocurrencies, we have individuals trading on the stocks, right? And so what we do for all of you all to really understand is we help you navigate the markets, right? That's what we do. We help you navigate the markets and understand them, how to properly utilize the tools. But then also what we do is when we analyze the markets on our morning calls, you take the trades basically however, whatever your trading style is. this. If you're a scalper, if you're a swing trader, you know, you're going to be able to take those trades if you want to put it on the HFX, because this works with everything. The strategy works with everything. And so I'm going to go ahead and refresh this. You can see a trigger for a buy, but I'm going to go ahead and refresh this, you know, because I'm going to just go ahead and delete it, because that's where our stop order was at this morning. So if you all took this trade from this morning, you got up to about 70 pips. So if you took it, just drop a 777 in the chat. All right. Just drop that 777 in the chat. All right. Yeah, so you just definitely want to, there we go. I know you guys did. I love it. I love it. I love it. All right. So love it, love it, love it. So like I said, I'm gonna just refresh this. Hopefully it'll clear it off. And as we do that and we clear that off, definitely want to make sure that, you know, we come back over here. We're looking at, hey, Trinidad and Tobago, good evening. Let me take this off of here. And I'm going to walk you guys through this, okay? I'm gonna walk through this. Okay, here we go. All right, so GBP USD. Now, from an understanding standpoint and how this works, let's walk through the strategy first. Now, as you guys know, if you have any questions, comments, testimonies, right, drop it in the chat, right? Any questions, comments, testimonies, I need you all to drop it in the chat, all right? So that's definitely what you want to be able to do as we go through this. Because once again, tonight is basics, and we're going to walk through the strategy, the BYOB cash out strategy, and we're gonna really help you understand and kind of navigate through exactly what this is, what it does, and, you know, make you that master trader. We want you to have that proper mindset, all right? So what is the BYOB cash out strategy? First and foremost, okay, good evening, Columbus. So first and foremost, you notice we're on a 15-minute chart. Now, what the 15-minute chart is designed to do is it's actually designed to allow you to really just put you in that position to where you can definitely, you know, navigate, you can definitely understand, you can definitely recognize some trades, and it's ultimately going to allow you to be in profit, okay? It's ultimately going to allow you to begin to navigate the charts and to be able to take profit. So this is where we begin, but I need your skill set to always to continue to develop, all right? I definitely need your skill set to always develop. Now, as I look at this chart, right, because 15 minutes, you can kind of grab 10 pips and cash out. That's where we begin, but once again, it's not where we stay. You know, we always want to be elevating from that area. Now, so if I'm looking here, all right, as I'm looking here, you can see I have my stochastic. So I'm working with 3 indicators, okay? I don't like the analysis paralysis where, you know, we're always, you know, piling so much on our charts. No, the BYOB cash out strategy has 3 indicators. And we're talking about price action with a twist. That's what I like to call it. And so I'm working with my stochastic, my Hikanoshi candles, okay? I have my Hikanoshi candles, and then of course I have my PSAR, which is the dots. Now, if I'm looking at my Hikanoshi candles, right? One thing, you know, for you guys to understand is that my Hikanoshi candles it's a translator for my Japanese candles, all right? They're trend candles. And so if I pull my Japanese candles up, this is what they look like. You know, you definitely can see that this is what my Hikanoshi candles look like, okay? So these are literally those trend candles. So now, as you're seeing it, I'm looking at this, all right? I'm gonna switch this back to my Hikanoshi candles. And so what these do is they actually interpret, okay? They interpret for our Japanese candles. So it's like they're translating. And so you're not trying to figure out how to read the candles. Now, should you know how to read them? Absolutely. Is that in the academy? Absolutely. Definitely something you want to make sure that you definitely, like I say, that you understand and that you're navigating through. But I want you guys to understand that they translate, which is going to make your life a lot simpler. Okay, it's just really going to help you gain that clarity in the market. Now, this is a leading indicator. These two are lagging. This is leading. This is lagging. And when I say leading, All right, so this one, that means that you should be looking at this one first. It really gives you that momentum that you're looking for first. It's a momentum indicator. You know, it's really going to give you that direction first. Now, one thing I definitely need you to remember as we go through this is that my lower time frames do not tell me the direction of the market. I understand that we're beginning on the 15-minute chart, but one thing I did ask you all, one thing I definitely explained is that you don't stay there. You are always developing your skill set. You know, 15-minute chart, what I'm explaining to you and walking through you with right now is going to allow you to dive into the market and be able to take some trades. But also at the same time, what's happening is you need to continuously be developing your skill set. So what does that mean? So here, my stochastic, you notice that I go from the 80 to the 20, all right? You know, my stochastic moves from the 80 to the 20. And so that means that when it's around that 80, you're looking at, you know, I'm oversold. Up here in this area, above this 80 is an oversold territory. Down here, I'm sorry, overbought. Let me say it right, overbought. Down here is oversold. And so what happens is the market is going, the momentum in the market goes up and it comes back down. All right. It goes up and it comes back down. It goes up and it comes back down. And that's how the momentum in the market goes. So what you're looking for is something to happen around this 80 and around the 20. And what that is a blue line cross over the red. So if I'm around the 80, I'm looking for that blue line to cross over the red, the downward momentum. And if I'm around the 20, I'm looking for that blue line to cross over the red and an upward momentum, all right? So I have that crossover and cross down and a downward momentum and that crossover and cross up and an upward momentum. Good evening. I see Orlando in Alaska. Welcome to the call. So now, when I have this blue line, let's go ahead and analyze this, okay? I'm gonna analyze from right here. So I have this blue line cross over the red in an upward momentum. And then I also, now that I have that, let me go ahead and drop this on here. Let's put this right here. You can see where that crossover happened, okay? But even when I'm looking at where that crossover happened, now I'm seeing my candles. I have that green candle, all right? That green candle has a flat bottom. You notice that the one that's actually right there does not have a flat bottom, all right? So that, but once again, it's beginning to set up. I don't even have a PSAR that actually pulled down and flipped to the bottom. I'm just trying to show you that point right here where you see that your stochastic happens first. I understand that our eyes are going to guide us to the candles. Anytime we open a chart, it's like, voila, I want to look at the candles. Well, no, you know, you definitely need, you're going to look at the candles, but I want you to train your eyes. I want you to train your habits. Perfect practice makes perfect, okay? Perfect practice makes perfect. And so I want you to train yourself to where when you come down here and you dive down here, what you're seeing is you definitely have this crossover and cross up, and this is where it begins for you. Now, you have the green candle with a flat bottom, all right? I have this green candle with this flat bottom, and now you see I have that PSAR and that dot flip to the bottom. So this is the BYOB cash out strategy. Now, what I'm also going to do, right, from here, okay, what I want to do from right here is I want to use something called time frame confluence. And that means I'm going to go down and I'm going to drop down and check a lower time frame. I'm going to come up and I'm going to check a higher time frame. Now, why is that? Because I need to know where the market is. How do I know if I'm in a correction? How do I know if the market's turning around? Like, how do I know if I'm in the impulse? How do I know if I'm in a range? How do I know what the market's doing? You don't. So I need to go look at it. And then, you know, ultimately, I'm also going to drop down, because dropping down is like those entry points. It's where the activity actually happens. And so that's ultimately what we need to do. So when I come up here to my hour, okay, when I come up to my hour, now please, 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 you know, this trigger for a buy, so you literally be over here, okay? So you literally be looking over here. Don't drop an arrow over here in a live trade. You're gonna impact your pip reaction time, which is, you know, how long it takes you or what have you to actually get into the market, right? You would actually impact your pip reaction time. And so when you're here, I put this arrow here because we're looking at past. We're looking at what transpired previously. You know, that's what we're looking at. And so we don't want to, you know, want to make sure that, you know, you want to make sure what we're looking at. So now, as I see this 15-minute, right, I have my strategy, BYOB cash out is in alignment. Now I want to come here to my 1 hour because that's where my confluence is. And you begin to see that that pull up happens, that, you know, blue line is crossing over the red. So I have confluence, you know, my price and my oscillator need to have confluence as well. So this is my price up here. You see the price along the side, and your oscillator is down here, which is the stochastic. I need them both looking like they're headed in an upward momentum direction. So you see that I don't like these candles, okay? You know, to give me direction. So however, it is green, but I want you to understand we're looking at how it closed. So if you were looking at a live market, it's possible it was red, it's possible it was green. What we do know for a fact is that this pulled back. All right, what we do know, if you look at this, we know that for a fact that it pulled back. So GBP has most liquidity. GBP has a significant amount of liquidity. So it is the only one that I can look at the 30-minute. It is the only one that I could literally go look at the 30-minute. And so because I can go back and I can look at the 30-minute, right? Because I can go back and I can actually check out what the 30-minute is doing, I need to have an indication that the market is telling me that I can go look at it. So we know that the stochastic is pointed up. For example, if my stochastic would be pointed down right here, there's absolutely no way I'd be looking at the 30-minute because my momentum on a higher time frame would be in an opposite direction. So now what I'm gonna do is I'm gonna drop down to the 30-minute. When I drop down to the 30-minute, right here, okay, right here, you see that we're in an upward momentum. And so now we know for a fact, you know, let's check our 5-minute. Let's not forget about the 5-minute, okay? Let's not forget about my 5-minute. It needs to also be buying. It has to be buying. Remember, if something happens, it happens on a lower time frame first. That's where our activity happens. That's where the shift, the change happens. It's not direction, but it's like it will give us that tighter entry point, right? It's not that direction, but it will definitely give me that tighter entry point. And so if you see something changes, if something's changing, you're going to see it start happening there because the candles, I get a candle every 5 minutes or a candle every 1 minute or a candle every 3 minutes. So you're going to see the activity happening there first. So it needs to still be buying. And so now what I can do is I can get in a market, I can get my 10 pips and cash out. That's what I can do. I can get in a market, I can do 10 pips and cash out from a market execution standpoint, or I can trade it to that next support and resistance line. And so, which, you know, we're right up in this area right here for that support and resistance. So if you know the support and resistance, then what you're doing is actually trading it. You see, you got about 40, I'm gonna say 40 pips, not 47 point anything or anything like that. I'm gonna say 40 because we have to own our pip reaction time, right? We have to own it. Now, also, you know, in understanding that, you do your 10 pips and cash out and you can walk away from the trade. Now, your stop loss, please trade with a stop loss. The PSAR is a parabolic stop and reversal. It is like a moving stop loss, a trailing stop loss that goes with it. So your stop loss goes below the PSAR. It does not go on the PSAR. One thing I want you to take and I want you to see is that you notice how this PSAR flows with it. The PSAR, as long as it stays below, as long as it's with it, the PSAR is always, you know, you got the candles. So if my momentum is still in that upward momentum, you see, even if I get a pullback, where's my PSAR? The candles do not go outside of the PSAR. So as long as you've analyzed the trade properly, you've analyzed the trade correctly, you've analyzed the trade, then guess what? You notice that there's always space between that PSAR and those candles. Now, it can come back and actually touch it, okay? It can come back and actually touch it, but it won't flip it. So you don't put it on it, you give it some space. Now, how much space is completely up to you with your risk management. What is your lot size? Completely up to you with your risk management. But remember, we always trade from a perspective of what we want to lose as opposed to what we want to gain, because we chase the skill set and the wealth is going to come. So I know we're back tested at 92%. I know some individuals are trading higher, but that does not change anything. Perfect practice makes perfect. Perfect practice makes perfect. You always, always do your risk management from a standpoint of what I want to lose as opposed to what I want to gain. All right. That's always where you do your risk management from. All right. So with that being said, ladies and gentlemen, this is the BYOB cash out strategy. Tonight is basics. You know, let's see what this is going to do. You know, I'm like, well, we got to trade on the call. Well, we have an analyzation on the one we're actually walking through and looking at. So this is the time for you to drop your questions, your comments in the chat. This is that time for you to ask those questions, okay? This is that time that's what you want to do. You can see where that call price happened, 3960. Yeah, we're not, this is having I'm not touching this. So let me see. Drop those questions in the chat. Now, because I'm gonna actually break this down just a little bit more. But I definitely want to make sure that we drop those questions in the chat that we have. You see, we definitely I want to see where the market is on this one. You can see why it triggered, but it's definitely sitting at, you look where it's getting rejected. It was rejected, 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 rejected. So I know my traders are sitting there looking like, do you see that there is a trigger right there? Are we going to analyze it? Are we going to talk about it? I know it's a training call. So, all right. So you say you wanted to, say you wanted to re-enter, meaning your first time or a continuation on that GBP USD trade, and the hour is continued to rise, but the PSAR does not flip. If the PSAR doesn't flip, you don't take the trade. So that means the rules are the rules. Now, one thing that you do have to implement, okay, one thing that you definitely have to do is, if I'm trading on a higher time frame, all right, this is what I mean why we start on the 15. Let me break it down, because I mean, it's a really good question. So understand that if I'm trading on a higher time frame, all right, if I'm trading on a higher time frame, now my understanding of market structure has to come into place. I have to begin to understand more market structure, right? You see that what I've been doing on our morning calls is drawing the trend lines, making sure you understand your support and resistance. You're not touching the higher time frames or trading from that standpoint, you know, until you, matter of fact, you starting at 10 pips and cash out, and then you advance your skill set as you advance your trading and your skill set as you move forward, like as your skill set develops. So I need to understand support and resistance lines. I need to understand those things. I need to understand my trend lines. I need to understand what it means in the market when I say look left. You know, what did the market previously do? What was the market at? You need to know how to do those things, because if I was trading here, right, you can see on my higher time frame, this is when everything flipped. And this is going to lead me into something else as well. You notice that you began to get that confluence right here. Now, we don't really have it right here, the same situation that we really just asked about, right? Same, similar situation when we analyzed on a lower time frame, same thing. And you can see where this pulled back, and you can definitely see what actually happened and transpired right here. Now I have to drop down to my 15. When I drop down to my 15, right? When I drop down, all right, you can see that we were definitely in that buy. But, you know, remember, the market can come up here and then pull back. And like, let's say the market had done this. We know where it went, but we're going to pretend like we didn't know where it went. So if the market was coming up here, and then let's say it just came back down here somewhere, and it you know, let's say it was just some sloppy price action or something like that. It has to break that last significant structure in order for us to understand that we have a trend change, because those are the types of things that you have to, as you advance your skill set, those are the types of things that you're going to be looking for and you're going to be looking at. Because over here, as this was coming down, you notice you had your impulse, correction, continuation. Notice how it's respecting those support and resistance lines, you know, correction, continuation. It didn't come up here and break this. So it didn't come up there and break that. So we didn't make a low, you know, we didn't make a lower high right here. You know, I mean, it didn't really shift that. So, and then of course we continued down, we made a lower low. So you can definitely see what's happening, right? It made that lower high, a lower low, That's technically, like I said, lower high, but it didn't come up and it didn't change it. In order for us to have a shift, it would have had to have come up past this one. And you notice that when we come back around, right, this is where we quit making those lower highs and lower lows right up in here. So I need to break that significant level. So if, and I should be on a higher time frame doing that so you can really see it. So it has to break that level, and that's ultimately where it is. And so when it broke it over here, as we were up for that rise, so it did. But if it didn't break it, 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 right? Then, you know, this is how you always respect that first support and resistance line. We know the trade is going there. We know it's going to end up there. We know it's going to get there, but how do we know if it goes past that? So those are the sorts of things that you want to look at. And so now that we know it is, if I'm looking in this area right here, all right, if you're looking in this area right here where we know it needed to break it, you know, then what you have to do is wait for that retest. This is where we begin to drop down. So nothing shifts, nothing changes. It's all still the same. Now, guess where we're back? We're back on the 15-minute chart. So we already analyzed, if you didn't grab that initial movement, you have to wait on that movement between the 15 to 5 minute. And you can definitely see that it breaks it, pulls back. You kind of see how it's hanging around that support and resistance line, how it's trying to break through it, it's pulling back, it's trying to break through, it's pulling back, and then it pulls out of there. So it's always going to, you know, reject off of there a little bit, pull through. Now this one did it more than once, and that's okay. But it's always gonna, you know, reject off of there some, pull back, and I mean, you could have a line up here as well, but I'm gonna just leave it where it was already at. So it pulls back. You see how it pulled back through there, right? You can definitely see, and then it rejected off of here. So if you get rid of it, you know, this right up in here, you can see, like I said, where it's going to reject off of here some, right? It kind of, let's just look right here. So it kind of rejects off of here some, it breaks through, it retests, and it keeps going. So once again, you would have gotten this trade if once we analyze it. So once again, we're back here on a lower time frame. Blue line crossover red and an upward momentum, green candle with a flat top, green candle with a flat bottom, PSR flip to the bottom. So this is why we always are here, making sure you understand, right? Always here, making sure you understand that that lower time frame is so important. So it's either going to be you're scalping or you're analyzing it for that tighter entry for your higher time frames. So regardless of your trading style, this is why this is the foundation of what we learn, right? This is why it's that foundation of what we learn. And because that 5 minute is that tighter entry, you guys will see me sit here on the 30-minute quite a bit. And that's because I'm looking at what's happening, because this is the confluence for my tighter entry. It's not that I'm like really analyzing it from that perspective. That's my confluence for my tighter entry. So I can see that, right? All that activity we just looked at, you can see where it was rejected, reject, right? You can see that. Now, one other thing, because we have some of you are doing the HFX, you know, definitely have quite a few of you are doing the HFX. So, so now these prices, okay, these prices, one of the prices is the actual, let me change this back over here. Let me show you. You notice that my price, right? You notice my price here, my price. When I'm on regular candles, I have one price, right? You notice that. When I come to my Hikanoshi candles, I have two. One thing you need to remember is that Hikanoshi candles are an average, all right? Hikanoshi candles are an average. So you'll see, you know, where the market is as far as the price, and then of course where the average is. So this is the one that's here lined up with my Hikanoshi candles, and this is the one that's actually lined up right here. This is my actual price of the market. So you notice that you always have two prices that's moving with this time frame. You always have two prices that's moving with, you know, with the time frame that's actually moving right there. So now, let me go back to this other question. So you said I did answer your question. So absolutely. You are the lower time frames are tighter entry or my scalpers, right? That's my tighter entry or my scalpers. And now you notice when I pull my charts up with you guys trading with me, I have the 3-minute up there also, because you can pull up whatever chart you want. BYOB Cashout works on everything. When we come through and we pull these triggers and, you know, we're analyzing the charts, you should have up whatever it is that you desire, whether it's your HFX, whether you're a scalper, whether you're a swing trader, whether you're intraday. We're going to analyze the charts and you take the trade. We're going to analyze the charts. And so that means that each and every last one of you all get to take a trade based on however you want to trade. So we're going to educate you in the evenings and we're going to analyze the charts with you in the morning. And that gives everybody an opportunity to take profit no matter what your trading style is, right? And so that's why you never see us saying, hey, here's your take profit. Here's your stop loss. This is where you enter. You know, an educated trader is a profitable trader. Bottom line, an educated trader is a profitable trader, and you are here to be empowered. And then you get to take it and you get to implement it based on your trading style. Now, the question is, do I wait on the counter to close? I'm going to go back to, you know, when I said, like, when we went through the instructions and we went through the rules and the directions, this is where we don't want to continue to always add to, because no, we do not have to wait on the counter to close. These are Hikanoshi candles. What we're looking for, period, point blank, with a Hikanoshi candle is a flat top or a flat bottom. They are interpreting for the Japanese candles. So they're not going to be flat until they're ready. You notice that they have wicks. So when you're looking at Japanese candles, you're looking at the buyers and sellers in a tug of war. You're actually looking at buyers and sellers and buyers in a tug of war. What Hikanoshi candles do is they smooth out price action. So they smoothed it out. So I don't have to watch the match. I just know who won. I don't have to watch the tug of war match. I just know who won. That's it. So I don't have to. Well, see, when you're waiting on those candles to close like that, and you're waiting and you're doing those analysis and you're doing those things, you are literally waiting. You're watching the match. Who's going to win? You know, who's got it? You know, is it the buyers? Is it the sellers? I'm rooting for my buyers. I'm going, hey, go sellers, go buyers. And so you're sitting there and you're rooting, but yet, no. I just need to know who won. My buyer right now, as I look at this on the 30-minute, my sellers are in control. My sellers are in control. So this is a trend candle. So that's what you're looking for. And so when we walk through this, we want to kind of download all of the other things. You know, trust me, I understand. I've taught how to trade the Japanese candles, right? I've taught classes on what to look for, the different types of candles, you know, how important they are, how you analyze it, what you're seeing. So trust me, I get it. And I know exactly what you're talking about. But this is simpler. This is life simplified, right? And that's what we are. This is just life simplified. And so that's what this does for you is it simplifies your life. And so we don't want to add too much to it and begin with all that analysis paralysis. It's gonna, you know, kind of take that over there. So, you know, it kind of puts you back where you're sitting there staring at the charts and you never take a trade, or you take a trade you shouldn't be taking, you know. So that's that. So you say I answered your question. We were okay. Great. So now, will you review buy stop outside of the support and resistance? I want you to come back on Thursday for that. On Thursday, you know, what we're going to do is we're really going to get deeper into those stop orders. And I say that because we just kind of went over it last Tuesday a little bit, where I talked about the support and resistance. I'll talk about it a little bit if we have a little bit of time, but you know, I definitely want to make sure that you guys understand it, because before I start doing stop orders, now, yes, we have those different orders, but before I start doing stop orders, I need to understand the trades. I need to know how to push the button. I need to know how to enter a trade. I need to know how to do that, because when I do a stop order, okay, just for understanding sake, right, I just want to grab this. So if I do a stop order, right, you know, you're going to put a stop order above or you're going to put a stop order below. You know, see, I'm not analyzing anything right now. I'm just giving you a generic. So I don't want you to be like, well, that's what she said. No. I'm trying to make a point right now, right? The market is moving in between here. And when we do a stop order, then it's going to be above or below. But that means that you're not sitting in front of the charts. that means that I'm not sitting there and understanding, you know, I'm not watching this manifest. And so for you to be able to effectively place a stop order, because you're not in front of the chart. So how do you know that we have a blue line cross over the red? How do you know that that PSAR has flipped? How do you know that I have a flat top or a flat bottom? Is because you understand how to take trades. You understand what you're looking for. You understand that. And so you're not sitting in front of the chart when it hits and when it happens. Oh, excuse me. So you're not sitting there and you're not sitting in front of the chart at that moment. So if I'm not sitting in front of the chart at that moment, that means that we are definitely putting in an order because, you know, we understand how to do the charts. Because what we don't want to get in the habit of doing, and that's why we dedicate this call for the basics, what we don't want to get in the habit of doing is just doing, you know, hedging this trade where I do a buy and I do, you know, I do a buy stop and you got a sell stop. And basically you have absolutely no idea where you're going. You're just guessing, you know. And so what can happen is this thing can, like, let's say this wick down, okay? Let's just say this is where it was based on what we saw in the past. So, I mean, of course, this is the future, but I'm just saying just in general. So let's just say this wick down and knocked you in a trade. And now you're coming up here. And so now you're in a hole here, but yet it comes up here and it hits and it activates your trade up here. So that's not what we want. If you get in a car, you know where you're going. I don't know anyone, I don't believe any one of you all on this call. I don't think anybody on this call gets in a car and just start driving. And it's like, well, I'm gonna get there. Where are you going? I don't know where I'm going. I'm gonna just get there though. Like I'm going to make some money, but I'm gonna get there. No, you know where you're going. And you put it in a GPS, and if it's not right or you make a wrong direction, it redirects you and it reroutes you, right? So not one of you all get in a car and do that. So how you do one thing is how you do everything. So you definitely want to make sure that, you know, you put that in there and you understand what you're doing, and then you're able to you know, place those orders because you understand how to properly analyze the trade. So hopefully that brings some clarity, because I just didn't want to say no, not right now. I want to make sure we understand how to look at the charts, how to take the trades, and then, you know, kind of go from there. You know, we'll build from that. And so Thursday is actually our tools training. So I'm definitely going to bring that back and implement it as we look at some of these triggers, okay? That's definitely what we're going to do. So you definitely want to make sure that you come back on Thursday. Because, you know, so just, you know, not to be the dead horse, but yeah, so there we go. And so now, you are welcome, you're welcome. So, all right, so that's stop orders. I see I got thank you, simplicity, you love it, I love it too. And somebody just took profit. We have 777 in the chat. So we took profit. I love that on a training call. Now, any other questions, comments, or testimonies? Because you guys know, you know, I'm a jump to the Bitcoin. You guys know that. Or you guys know that I'm gonna go analyze a crypto and help you understand. Well, you know what? Let's just do that. So let's just do that. Because I want you all, I made a comment this morning. All right. Let's see that it even triggered lately. So nothing has triggered on here recently. So it was kind of, it's kind of just sitting there. Nothing has actually triggered. So I made a, you know, I made a, thank you so much. So pivot lines, haha, great. I'll add those on there. So, you know, because you know I trade with them. I definitely trade with my pivot lines. So now, as we're looking at this, one thing I definitely want to, and I'm going to drop the pivots on both of these charts. So as we look at it. So you notice that, you know, you're on a call this morning. I'm going to just kind of show you why those lines are there. And it's kind of, what it did is it created a channel, which on the higher time frame, it looks like a flag, right? And so as we come down, you can see we're kind of in a channel. So I'm going to cut my pivots off right here for just a moment, because I want you all to understand this the exact same thing. I want you all to understand that we're operating with that same mindset and that skill set as we trade the cryptocurrency. Blue line cross over the red in an upward momentum. Notice I had a green candle with a flat bottom here, but I didn't get everything in, and I didn't get it all until I got to over here, all right? Didn't get it all until I got to over here. Now, we already look, when we look at the higher time frame, we're looking for our confluence. I have it. When I drop down, I need it to still be buying. I have it. And where am I going? Now, this is why I'm bringing this up on our basic call, because there's so many of you all that are actually wanting to trade cryptocurrency. And so many of you all want to trade the cryptocurrency. So many of you all wanting to understand how it works, okay? And so with understanding that, you know, this actually works absolutely no different. But the thing is, so go back to when I broke the rules down. How many flat bottom candles did we break down, or how many flat bottoms? So when we get that first flat, once we have all the rules aligned, once we have everything and we do our time frame confluence, we can take the trade. That goes back to what I just explained with those Japanese candles. And, you know, do I have to wait for the candle to close? You know, that goes back to trading with Japanese candles. So I need you to delete that. Once again, they're important, but I need you to delete that and follow, you know, and just walk with the rules of the strategy. We don't want to add rules to it. You know, you want to walk with the rules of the strategy. So now, you know, as I was saying, as I'm here, do not touch this until you understand support and resistance. The only place you can do 10 pips and cash out is over here, okay? It's foreign exchange. That's it. That's all. That's the only place I can do 10 pips and cash out. So my skill set definitely has to develop. You know, I definitely have to, you know, own being a master trader. I have to own being the signal, because 10 pips and cash out is for over here. When you begin to go past that, you know, or I want to get on a higher time frame, or I want to trade something else, I need to understand here, right? I have to understand this, that I'm here, you know, I have to trade, I have to understand my support and resistance. Also, in addition to that, you know, where does this support, this first one kind of meet? Right up in here. You know, actually, no, let me bring it down here. All right. So understanding that, you know, I can definitely see where my support and resistance lines are. I can see where they are in the chart. And so, you know, that this is where you would have been able to take that trade to. Same rules apply to the first support and resistance line, to the very first support and resistance line. Okay. That's ultimately what I'm trading to. And also, I want you to make sure you understand that you need to cushion this, because if you open your MetaTrader 4 right now, right? If you need to know how to trade it. That's like getting a car. I got a Honda and I got a Ferrari, right? Or I got a Honda, a 4-cylinder, and then I have, you know, a sports car. So regardless, you know, of what type of car it is, they all going in the same direction. If we're going north on 95, then I'm going north on 95. Now, how fast I get there or how I get there is what's going to be different. So if I'm going north on 95, whether I'm in a Honda or the sports car, I'm going north on 95, right? It does not matter. So the same analysis, same BYOB cash out strategy, you know, the exact same thing is what's going to take you to where you want to go. But I also know that this is, you know, I know my spread dealing with cryptocurrency. I know the pullback. You need to know how it moves. You can, you know, if I hit the gas in a sports car, I'm gone, right? Where if I'm trying to hit the gas, even up a hill, where if I'm in a Honda, a 4-cylinder, reliable car, right? Very reliable, is going to get me where I need to go, which is to my financial destiny, my financial freedom is going to take me there. But, you know, is when we going up that hill in a 4-cylinder, I just want you to imagine that. You'd be like, are we ever going to get there? You know, just imagine. But yes, you're going to get there, and you're going to get there safely, and you're going to get there securely. So just understand, right? When you're really looking at those things, that's going to help you. So there's nothing wrong if you only trade Forex, right? There's nothing wrong if you only trade that. You know what I'm saying? There's nothing wrong if that's the only one that you trade. But if you want to add something to it, like right now I'm looking at Bitcoin, just analyze this for you. Just walk you through it, right? Just walk you through exactly how to do it. But understanding that and understanding, you know, you're actually in a position to where you can understand how to drive that sports car. So you need to practice first. Get on your demo account. Make sure you understand, right? Even when I do my take profit, let me help you with this, okay? Because if you do a buy stop or a stop order with this goes back to what I was saying before. You know, this will wick you in a trade. Like it'll tap it and it'll put you in a trade, okay? If my stop loss is down here and this comes here, if it touches it, it's going to take you out of the trade, okay? That's what it's going to do. You know, no, crypto is not the Honda, not at all. So no, not at all. Not with the amount of money you can make and the amount of pullback that it gives you. Because now, but let me make this point. And so when you hit this, you know, when you look right here, it's going to have to, when you hit your take profit, it has to push past that, including the spread. So you always want to get used to making those adjustments, right? Because look at your spread. What is it, like 10,000? When I looked at it earlier, if I look at the spread right now, the spread on Bitcoin, 11. So you know that it has to cover that spread in order for you to take profit, because the broker has to get paid as well. You know, the broker has to make money as well. And that's where they make their money from. So you just want to make sure that that mindset and that thought process is there and you understand that. Now, crypto is not the Honda. And the, you know, the hoopty is the CHF pairs. But no, crypto is not the Honda. When you really think about it, crypto surges. So you might think it's going slow, but it surges. And so when I'm talking about that, I was using that reference to help you understand how it moves and how much it moves. Because trading at a 0.01 can really pay some bills, right? Trading at a 0.01 can pay some bills on Bitcoin. And so, you know, that's why it's not a Honda. Now, when you're thinking about a sports car, you're probably, you know, and fast, absolutely. You're probably thinking about the indices, right? You're probably thinking about indices because how they move, right? You know, when we were, you know, yeah, indices I would say is an Autobahn, and I enjoy driving on Autobahn. I'm not even gonna lie to you. They actually drive better than we do here in the States. So that's what this would be, you know. So when you look here, and have you ever, this is like, and that's a good, that's a really good analogy as far as the Autobahn. Because have you ever driven a car and you hit the governor? You know, did you know that our cars have governors on them? So have you ever driven a car and hit the governor where the car is shaking and won't go no faster? Well, that's what this does for you. You know, you have an American car over there, that's what's going to happen. And so that's what the indices do. You just need to know what kind of vehicle you're in. And so this one is going to surge. It's going to be driving, and all of a sudden it'll be, you think you're not going nowhere, and all of a sudden it's gone. And so your stop orders are going to be very important on here, right? Your stop orders are going to be important, but you first need to know how to take the trades, right? We need to know how to analyze and how to take the trades. So good questions. Now let me go back to the pivot. You said, and you know, I like it. You say you spanked the US 30 today. I love it. I love it. I love it. Patience, profit. And that's because you are an educated trader. So let me delete this, you know. Let me delete this because I don't want us looking at that, you know, I want to, so let's I'm going to put my pivots on here because you guys know I love my pivots. So let's put our pivots on here. And so did you see what I did? Because I think you said, how do you add them? And so you come up here to where your indicators are, right? And you type in, I just type in pivots and I use the standard pivots. Those are the ones that I use, okay? And now you know that my pivot point is on here. Now, understanding the pivots on a higher time frame, if you really start seeing, this is going to help you with understanding the market. It's going to help you with, now don't just trade to the pivot point. Please don't just trade to the pivot point. What you have to do is you want to trade this, but let the pivot points guide you. I don't trade to the pivot guides me. So on my higher time frame, you notice that my pivot point is up here. Now on my higher time frame, if we look at this, okay, I want us to look at this. You can see that on my higher time frame, you notice where that pivot point is. The pivot points, do not ignore your support and resistance lines, guys, don't. But pivot points are also support and resistance lines. They're just more like the institutional levels because they're calculated, you know, they're they're calculated they're calculated based on, you know, what's happening in the market right now. And so you notice that the market typically hangs out around that pivot area. Now it'll go up to that R1 on the higher time frames. Typically, like the R1, as you can see, we've been going up to like the R2, but it's the market draws back to the pivot point. And so as you dive down, you want to use them on all the time frames. You know, that's going to help you understand where you are, because you notice that my pivot point was above on a higher time frame, but now it's below. And so look, it looked like I'm gonna pull back before I go up. So look at where my pivot point is. And so those are gonna help guide you. And so you notice the pivot points are already on here. Now, those pivot points are going to be important as you're trading Bitcoin, right? Let me cut them back on. They're going to be important because there is no look left, right? Right now we have some look left, but we're at the highest point that we've been. You know, so we're at the highest point that it's ever been. So I cannot, you know, if I come up here to my daily, right? Once again, or even, let's just look at the weekly real quick so you can really understand what I'm saying. Look at Bitcoin, okay? Look at it. There is no look left. There is none. So we have to, what the market is doing is it is creating support and resistance as it goes. So this will always be that point as the market moves and as the market moves forward. It's going to always be that point. So there is no look left, but you know, so I have to use my pivots. And so the pivots are based on current market conditions. And so when I put my pivots on here, but use them on everything, they work. So you notice that we were here as the market's been rising, look how it's been respecting that. And so even when it's rejected, where did it reject off of? It rejected off of that R2, right? It rejected off of that R2. So, you know, those are my pivots. And even if I drop down to my lower time frame, you know, of course, the further away from the pivot point, the more, you know, you're approaching that overbought, oversold area, the further away from these pivot areas that we get. And so you can definitely see that the market typically is going to pull and then pull back towards that pivot. And then every day they're going to adjust. So they'll readjust based on market conditions. And so that's just something to really help you. And what do you mean? Can we go over buy and stop loss? There is no buy loss. There's no such thing as a buy loss. And your stop loss simply goes above or below the support or resistance line. That's it. It just simply goes above or below the support and resistance. Okay, so we definitely, you're talking about for HFX. So now, you want to use, let me come here. When you come here, let me just grab a currency pair. Now, you know, just so you understand, okay, the difference. So when I come here, like, let me just type in GBP AUD, all right? So the first one is default. Anytime you click this, right, anytime you just click this and you see this first broker that's on there, the first feed, that's default. That's default. And that's what we back tested, right? And so now the difference between these two is the PSAR flips faster on this one. You know, we back tested here because that's the default. We back tested on this one too, to be honest with you. But I wanted this one as the results and everything because of the fact that you know, this is default. And if we can do it with default, then of course that's great. People don't have to come in and try to press that button and remember to do that. But however, you know, the second one, you know, the PSAR flips faster. That's going to help you with HFX. You know, that's going to help you because, you know, when we went through that training, you know, of course, I created a playlist so you can go back and, you know, you can go back and look at that. So I definitely created that training. And so when you look at this, you know, this one, the PSAR is going to flip faster. And so as you already know, so sometimes we're not going to get that perfect lineup on every single time frame, right? You know, we're not going to get that perfect lineup where it's at the 15 to 5 and everything is at the over, you know, everything is up here and it's pulling down. So that's going to be important because remember, it just has to close above or below it, you know, and you find your sweet spot. So as I do that and, you know, correct, absolutely, that's correct. So as you do that and you see right here, I mean, it was back tested on both of them, you know, just for clarity. But we did the first one, the default one, because that's what most people are just going to do. They're just going to type it in and click enter. But I want you to be conscious to drop down to the second feed, because when you start dropping down, when you're looking, that you want that flip a little bit faster, because you're looking at it. Remember, it gets that pullback, like we get that pullback around that support and resistance. And then it needs to flip, so you can definitely take that trade. And you guys have been killing that HFX. I'm excited for you all. You guys have been doing it. And what I really love is that when we're on the calls, and in the mornings, and we're analyzing it, and it's like I know who's on there. The guy, for those of you all who are very consistent, I definitely know who is on the calls. I definitely know who is, on there. And so I know who my swing traders are. I know who my intraday traders are. I know who my scalpers are. And I can tell you the feedback from the scalpers with the HFX has been phenomenal. So, if you are a true scalper to your heart, go pull up that playlist on our YouTube channel, that playlist that's out there, and that playlist is going to help you. Even the 3 videos that Dr. Byford did that we referenced back to about understanding what they are and why that market exists, you always want that why behind the what, right? You always want to understand. And so both of those are in there. Haha, Scalpers United. You know what? I love you guys. So exactly, that's what I mean. So it's flipped on one and not on the other. And so the PSR flips, now nothing is 100%. Nothing is 100% guaranteed. Nothing is 100%. Nothing is 100%. Even the strategy is back tested at 92% accuracy rate, right? So nothing is 100%. If somebody tells you something's 100%, just walk away and turn around. So, but that's what's typical. That's what normally happens. And so that's why you still have to analyze it. All right. So, guys, I love you all. This has been great. BYOB Market Talks. You said the playlist helps tremendously. I'm excited.